This is The Big Story presented by herbchambers.com.
I'm Steve Syre. I write the Boston Capital column in the Boston Globe, and I've spent most of Tuesday watching the stock market. It was an incredibly volatile day, both going up and down, very unpredictable. Stocks were significantly down during the afternoon, and about 2:30 started heading straight up, and by the end of the day, the Dow Jones Industrial Average had closed up about 430 points, obviously a huge swing. The big news of the day had to do with the Federal Reserve, which was meeting to decide what it would do in the short term to help stimulate the economy, or at least prop it up. Clearly, everyone in the market and around the world has been concerned about the economy slowing down and possibly going into a new recession. The Fed's policy group met and decided that they would keep short-term rates, and these are the kinds of rates that the Fed can control as opposed to long-term rates, keep those short-term rates down near zero, where they've been for a while, for another 2 years, basically come back and see us in the summer of 2013. Initially, the stock market reacted negatively to this news, but as they parsed it out a little bit longer, stocks went straight up. But we're still in an extremely volatile time. The Federal Reserve gave their view in general of the economy, where it is right now and where it's going to be in the near future. Now, the Fed talks in language that would put you to sleep in 2 minutes. It's designed to be boring, but basically what it said was, we're not doing as well as we thought we would be here, and when we look out over the next 3-6 months, things aren't going to be so hot either. We may grow, but not nearly so quickly. And this is somewhat reassuring in that it doesn't talk about another recession. That's the real fear in the market. But on the other hand, it reinforces this idea that we're going to poke along. As we look at toward the end of this year, that's probably going to be inevitable, and it may look in retrospect as not such a bad thing, considering that a recession would be a really, really negative event and something that would not only hurt investors but hurt everyone in the economy over the next 6 to 12 months.